Hi guys, welcome back to another video. The topic for today is how to optimize your income tax, SRS introduction, and the best platform for SRS. Let me start with my personal experience. I have resided in Singapore since 2016 and was looking for the way to optimize my income tax. Let's take a look at Singapore personal income tax. Filing a personal tax return for tax residents is mandatory if your annual income is above 22k. Personal income tax in Singapore is based on a progressive structure, meaning the tax rate varies from 0% to 22%. Let's find out personal reliefs in detail. In personal reliefs, there are 14 items that you may be able to claim tax deductions. The things that you can strive to reduce your tax are essentially life insurance and SRS, as the others more or less are predefined. What is SRS? Supplementary Retirement Scheme is a voluntary savings scheme that helps you boost your savings for your retirement life. It's a part of the Singapore government prolonged strategy to address the financial needs of a growing population by helping Singapore residents to save more for their old age. All in all, SRS offers attractive tax benefits. The annual SRS contribution cap is $15,300 for Singapore citizens and permanent residents, and $35,700 for foreigners. The reason being is less for citizens and PR holders is that SRS is designed to complement the CPF. Basically, CPF top-up cap plus SRS cap is more or less 30k. In this video, I will estimate tax savings assuming you are a foreigner. As you can catch from the below bar chart, your taxable income is reduced as much as your SRS contributions. In other words, contributions to SRS are eligible for tax relief. Then let's calculate the tax savings amount. Suppose you contribute the full amount, which is $35,700. Your tax savings is approximately $5,000, which represents ROI of 14%. In addition to tax savings, obviously you can earn capital gain and or dividends. Here is your ROI at the end, including all you can expect from SRS investment. In general, your profit target should be approx 7%, which comprises GDP growth, interest rate, and alpha. You can replace the interest rate by inflation. The rationale behind is to add interest rate or inflation is cash depreciation. If you put inflation, expected return will be 9% as the inflation rate is approximately 3%. Alpha is the additional return depending on what and when you invest. Anyhow, the should expect return is 7 to 9%, which equals to the average profit of most global ETFs. However, it's less in 2020. As GDP growth is expected to be minus and interest rate is nearly zero, you can expect only alpha technically in 2020. Assuming a comparable environment, 7 to 9% is the return you should pursue. So, on top of this 7%, you also have SRS tax return, which is 14% as I showed a while ago. Consequently, the total return is 21%. This is even higher than Warren Buffett's 35-year average return, 17.1%. For sure, SRS tax savings differs depending on individual income. There is an Excel file on IRA's website. Use this free tax calculator to estimate your personal tax liabilities and tax savings from SRS. Till now, I shared my story about why I decided to do SRS. As a next step, I decide to what to invest. I told you from my previous videos why index fund, ultimately ETF, is always the best choice. I won't repeat, but look at the fee on the screen. This fee is from the fund fact sheets of famous active funds. The fee itself is over 5%. As usual, I decided to invest in ETFs and picked 4 ETFs: Vanguard Total Stock ETF, Vanguard Total Bond ETF, Vanguard Healthcare ETF, and iPay, which you may not be familiar with. Vanguard ETFs are the ones invest in global stocks, bonds, and healthcare respectively, and iPay is an ETF provided by iShares, investing in mobile payment. However, I noticed that I can use SRS to buy SGX listed stocks only. As the 4 ETFs I selected are listed in the US, I had to drop the case. Alternatively, I selected 5 dividend stocks: SGX, DBS, SATS, ComfortDelGro, and Shengshong. Another issue I face is hefty commission fees, which really eat into my profit. Based on the Fund Supermart, who offers the industry's lowest fee, the minimum fee per buy is $10. As I don't have tens of thousands of dollars to invest, I cannot expect 0.08% fee. Since I want to benefit from dollar cost averaging, I only can buy $600 per stock per month. Subsequently, the fee is 1.7% plus. Why plus? Because I cannot buy a stock at exactly $700. Finally, I consider going the much cheaper robo-advisor route instead. I was informed that most of them also invest in ETFs. If you invest the traditional way, say through a unit trust, there is an investment manager handling your account based on his or her investment strategy. While robo-advisors are digital advisory services that basically replace the human investment manager. Robo-advisor is characterized by minimizing human intervention. Interestingly, during the corona pandemic, robo-advisors outperformed human fund managers at -5% against -10% in March. The company I choose is Indowas. Value Champion introduces Indowas as the best fit for SRS and CPF investors. Here is a list of Singapore robo-advisors. StashAway was also in my shortlist along with Indowas. I will tell you 5 reasons why I choose Indowas later on. By the way, please note that Smartly is shutting down. If you want to know more about SRS and StashAway, there are good videos you may want to refer to on Hiya TV. The channel link is on the top right and the video links are in the video description. Now, let me tell you why Indowas. As you can see in the thumbnail, they work with best fund managers. PIMCO is a leading global bond investment firm, and Dimensional Fund Advisors and Vanguard, as I shared in earlier videos, are the best ETF providers together with iShares. The rest of them are also pretty well recognized. Let's look at my Indowas portfolio: 60% stocks and 40% bonds. I have a DFA fund for stocks and 3 PIMCO funds for bonds. I got one thing to tell you. As you know, I'm a fan of ETF. Passive may make sense for equities, but bonds are different. The median active bond manager has outperformed its passive peer by above 50 basis points over the last 10 years. Looking at the allocation is well diversified as their benchmark is the global market. Indowas offers 6 portfolios for you to choose. For example, you could fully invest in stocks. You could set 60% stocks and 40% bond as I did. Of course, you could fully invest in bonds. When you sign up, Indowas recommends a portfolio considering your risk appetite. You can choose a recommended portfolio or you can choose another portfolio. If I'm not mistaken, I was recommended a 100% stock portfolio, but I choose 60%, 40%. Please refer to the video on the top right to see why you should buy stocks and bonds together. The historical annualized return of 60/40 is 6.35%, excluding 12% loss in mind, which is arising from the virus outbreak. Annualized return is around 7 to 8%. Here are 5 reasons why I choose Indorse. First, my money is secured. Second, high quality of the products you can invest in. In particular, I was happy to see DFA, Vanguard, and PIMCO in Indorse. Third, low fee, only 0.4% per year. Fourth, Indorse automatically pulls from my account and invest. No hassles like an ETF, where I have to buy stocks on trading hours, which can be at night if to buy US listed ETF. Lastly, the customer service is very good. Many webinars and insightful articles keep provided. Let's take a look in more detail. First, my money is under UOB. When you create an Indorse account, they will create a trust account in your name at UOB Kay Hyun. Second, you can invest with the best fund managers. Personally, this is a key factor that I selected Indorse rather than StashAway. If you invest with cash or SRS fund, your partner will be DFA and PIMCO. Some of you may not be familiar with DFA. This company specializes in index investment based on the efficient market hypothesis that I shared in my previous videos. The main difference from Vanguard is that DFA aims to earn an additional 2% return against benchmark. DFA hasn't withdrawn any single fund in the last few decades, and most unit trusts have consistently outperformed the index. Third, the fee is low, is 0.4% per year if CPF or SRS. The fees from a fund manager is also low. The DFA equity fund that I have is 0.43%, and the PIMCO bond fund is 0.49%. I also like Indorse Insight. They keep posting good articles and columns. The process of opening an account is essentially the same for all robo-advisors. In my case with Indorse, it took less than 10 minutes and the account was created within a week. The bottom line is, SRS is a good one. Indorse is the best platform for SRS. That's about it. Hopefully you enjoyed. Thanks for watching. Catch you guys in the next one.